Morning, friends. Welcome to the weekly market update. Today is March 23rd of 2023. As maybe you know, the Fed, they raised the rates yesterday, 25 basis points. So what does that mean for us? What does that mean for the market? Let's take a look at a few slides here so we can just kind of wrap our heads around it. So, the good news is the rates are actually back down a little bit. We're holding steady around 6.5, 6.42 is what you see here. This is from FreddieMac.com. This is their posted average rate as of Thursday, which is today. You can see here from the chart, we've had a good bounce back. What you notice is right in this area is where the California bank, the Silicon Valley Bank, had their issues. So what happens is it creates a little bit of a market insecurity. Everyone wants to come out and say, hey, things are still fine, and it causes an upswing. So everyone wants to just prove that things are good. So we're benefiting from that right now. But you can also see, look at, green is good, red is bad. We always say that, but look at all the swings, the up and down swings. So it's not a real stable market right now, I would say. We are locking, though, because this is probably the lowest they've been within the last month, down in the 6.4 range. So the Fed's raising the rate. Obviously, we talked about it. They raised it 25 basis points. Here's just some highlights of the comments they made. But the biggest ones are inflation's remaining elevated. And also they're saying that the banking system is sound and resilient. So they kind of combat each other a little bit, right? But they're raising the rate based on what they feel is inflation not slowing down. I do think this is maybe a little wrong personally, because what we're going to see, and I'll show you in a slide here in a little bit, is there's a lag in some housing market information that will probably show that inflation is actually coming down. In fact, one of the things they did say is goods inflation has been coming down for 6 months. So what's happening is some sectors are raising, some sectors are lowering, but the sectors that are raising in inflation are way less than the ones that are lowering. They don't like what they see. They're kind of looking in the rearview mirror, playing the game of, oh, what has happened, not versus what we think is actually happening going forward. And that's how they're doing it. They're basing it all on the stats and the information they're getting, which is not always current. It's sometimes, weeks behind, month behind. So when we talk about inflation and when we look at house pricing, there is a lag in the inflation with the housing and the information they're getting. We think around May, beginning of May, I think May 10th is kind of a date to circle on your calendar where we think that the inflation numbers might drop quite a bit because that lag will come true and we'll actually see the full set of information. What we can show right now is just looking at single family attached, which is a house, versus detached, which would be like a condo. These are the rent prices. So you can see they were going higher and higher and higher and higher all the way up until right at the beginning of 2023. Well, we're saying, hey, they need to get lower. It's just taking some time. But as you can see, they really are dropping. And this is where we get to the thing. It's the whole lag concept. Nothing happens overnight. You have to wait for things to happen. So I'm hoping this is a positive future for us with the market. It'll stabilize. It'll drop us. It won't just continue going up. We'll see a better go at inflation. We take a look at, just for realtors, the existing home sales. They were up 15% in February. So year over year, they're down 22% from the same time last year. But if you look right here, they were down 37% in January. So that's actually a trend positive. So, we're seeing a positive trend. And we're also seeing that if you look down here, the FHFA, that's like Fannie Mae, Freddie Mac, those guys, they're saying there's an 8.4% appreciation rate every year, the year over year. So house prices are still going up, which is good. But again, inventory is bad. So here's a look at inventory. So inventory low, house prices going up, appreciation going up. This all means that house prices are still going to probably keep inclining for us in our area in DFW. I know this is a lot of slides. I know there's a lot of information. Let's go ahead and stop that. It's March Madness, so hey, go have some fun with March Madness. If you're not selling houses this weekend, if you need me, please call me. Me and my team will be available, and I appreciate you watching. Look forward to doing another one next week. Thanks.